We do have a chart on the Bloomberg terminal that illustrates the decline of the US dollar, now getting close to slipping below that 200-day moving average. So do you feel the dollar's peaked here, and how much downside do you think there is to go as the Fed signals that slower pace of rate hikes ahead?
Yeah, look, we think it's peaked in terms of the cycle. So late September, early October, when it had a real surge of energy, we think that it's back from there. It's substantially. It's still sort of within some of the ranges. Don't think it's necessarily broken key levels there, but as you mentioned, it is looking fragile. And the price action was quite striking, I think, last night to have a very substantial dollar pullback on when the Fed is still on track for probably, I mean, market pricing is still a little over 5%. And if you look around the world, that's still a very attractive interest rate. So maybe it's that combination of a bit of fading yield support and concern over a recession ahead. Had those weaker PMIs. So look, we think it'll probably stabilise the next couple of weeks, but definitely think it's peaked and certainly lower next year.
Yeah, it is important to keep a sense of proportion here. We're talking about 50 basis points like it's small, and by historical standards, these are still quite large increases, especially when you compare it to, here in Australia, the Bank of Korea expected to downshift today. So, as you say, the US dollar is still looking pretty attractive compared to some of the other currency pairings, right?
Yeah, and we've heard from the Bank of Canada overnight as well, saying that they're close to the end of their tightening. They've already shifted down a bit. And looking next year, so the ECB, yes, they'll hike in December, probably, again, easing back to 50, but their terminal rate, the markets aren't pricing a very high terminal rate there at all. So, and Japan, a whole other story again. So it does still have that yield appeal. So I think part of it too is whether the improved equity sentiment reduces a bit of safe haven demand as well.
Tell us a little bit about the Japanese yen, because of course you broke below that 140 level, and I think you were going neutral for the week ahead.
Yeah, that's right. So we're looking for a consolidation. So obviously it's pulled back a great deal. And I like the Bloomberg analysis suggesting intervention was worth about 8 yen. Timing was very, very good, that's for sure. But really it's all about the Fed versus the BOJ, who are on hold. Unless we get some really dovish surprise from the US in the next few weeks, I do think there'll be people looking to buy dips on dollar yen. So wouldn't be surprised to see it back to sort of 142, 143 in the next couple of weeks, maybe a little bit higher, but again, all eyes on the Fed and the economic data, the payrolls, etc.
I was trying to look for some information about what was happening with the Aussie dollar, but I couldn't really see any catalyst, at least not sometime soon. Is there anything interesting, though, when it comes to the Aussie renminbi, given what's happening with COVID-0 as well?
Yeah, well, it can be a tricky one, the Aussie against the renminbi, because the Aussie is very frequently used as a proxy for what's happening in China. It's obviously easier to trade. You're not facing a massive central bank potentially on the other side of the trade. So we do see spec short positions on the Aussie and futures markets that I think reflect concern over China for sure. China obviously has very, very large trade surpluses still, so that provides some insurance, but no doubt about it, the COVID-0 is hurting both the Chinese renminbi and the Australian dollar.
Just want to talk about the New Zealand dollar too. We did have that big move from the RBNZ yesterday. They considered 100 basis points. We've just had Adrian Orr this morning telling a select committee they're now trying to deliberately engineer a recession. So with that in mind, do you want to revisit your call on the Kiwi dollar? I think you saw that dipping below 50.
Yeah, look, it's got tremendous yield support now if we're looking at 5.5% in terms of the OCR. I think it has been trading very well. It's really improved on crosses for a couple of weeks leading into the meeting. So I think there was a fair bit priced in terms of the RBNZ. But nevertheless, an upside surprise. So Kiwi US. Again, I think mostly the correlations are still that if we're talking about where's the next 5% in Kiwi US, it'll be the US side that drives it. So it is still more about the Fed, we think. But in terms of that yield support, it's very strong. And for Aussie Kiwi, we've been looking for it to buy dips, but certainly it's very hard to fight the trend at the moment.